All right, it's a midweek edition of the show. BUA cement stocks took a hit yesterday, but another BUA subsidiary, BUA Foods, has displayed itself as the most profitable consumer goods company in the first half of the year. So let's feast on some more earning results as well. CBN injects 700 billion naira bailout in Unity Bank-Providus merger. Fair play, foul. We'll get into that as well. We'll also be spotlighting the most profitable listed bank on the NGX as they commence recapitalization. That'll be Zenith Bank. So stay with us for that. This is Market Pulse on News Central in partnership with Nairametrics. Welcome to you. I am Joanna Mustapha, your host, and we're going to begin with a breakdown of market activity on the NGX today. We are seeing some sort of rebound. It's making a marginal rebound from a string of losses that we've seen over the weeks, about 2 weeks now, as it gained 0.18% today, 97,098.98. That is what we're seeing with the rebound. We're also seeing increased trading activity, when it comes to trade volume. Are we seeing a return to normalcy after all that rumble in the past weeks? We're going to have to wait and see, and hopefully we're able to sustain this below. The bull continues to have a hold. When we come to top gainers, Red Star Express, top of the list, 4 naira 18 kobo, up 10%. Is this a bullish bubble that will soon burst? We're going to keep our eyes out on that as well. In at number 2 as a top gainer, gaining almost 10%, 9.98%. No surprises. Oando, 33 naira 60 kobo. What is driving this stock, right? There are questions around that, right? What is driving interest around this stock as well? We're also seeing UCAP, the usual suspects when it comes, to the top gainers with a 9.90% gain. Another stock that we can say keeps on giving. We're moving now to the top losers list. Nymeth Pharmaceuticals is topping the losers list, down 7.69%, 1 naira 80 kobo. That's where it's at right now. Honeywell Flour, one consumer good company which has not had it funny in recent years. A string of losses, down 6.10% today, 3 naira 85 kobo. We're moving to the top movers now. The banking institutions, banking and insurance, they have, a fair share on the list here today. Access Core topping the list when it comes to trade volume. We have GT Co up on their UBA as well. Veritas Capital, we know that they also posted significant earning results recently. So a lot of trade activity when it comes to volume in that regard. Moving now to the currency market, the Naira has pushed above the 1,600 level. It closed midday at 1,593 naira. So there's some activity there in the currency market. But joining me for a proper thorough market breakdown after this break is Director at Halo Nigeria Capital Management Limited. We're speaking with Dr. Paul Uzum. Stay with us. This is Market Pulse. Right now, we're picking up the pulse of the day with Dr. Paul Uzum, the director at Halo Nigeria Capital Management Limited. It's great to have you in, sir.
Yeah, thank you.
All right, welcome once again. And of course, let's begin with BUA Foods. They have somehow managed to show themselves as the most profitable consumer goods company in the first half of 2024. What would you say is giving them the edge amongst their peers like Dangote Sugar, Flour Mill, Nestle Nigeria, who we know have taken a hit mainly due to FX losses recently?
Okay, this year is a peculiar year for several companies.
Right.
Many of them are reporting losses. Many companies that have been before now have been doing so well in the markets are struggling because of huge FS losses. For BUA Foods, what makes theirs peculiar and what made them outperform other companies in that sector is that their FX exposure is quite small. It's less than $100 million. So the FX loss is just about 54 billion area. While the likes of Nestle was reporting about 318 billion naira FX loss. Dangote Sugar had over 200 billion naira FX loss. So in all, because of the minimal impact of FX loss on BUA Food,
Right.
The BUA Food was able to do very well, reporting as high as over 131 billion naira as profits for this half year.
Let's hope other companies are able to take a page out of their books when it comes to minimizing, FX exposure. But we've also seen the decline in BUA Foods' loan profile, right? Their current bank borrowing has almost halved in H1 compared to what it was at full year 2023. End of full year at 2023, it was about 648.7 billion naira. So it's somehow halved. Are there any insights on how, their strategy when it comes to managing their debt profile?
Okay, if you go to the market right now, the price of most goods in the markets over the last 1 year have doubled. Most consumer goods have doubled in the market. So for BUA Foods, this first half of the year, they more than doubled. That's a bit over 100% growth in their turnover, in their sales. So with that increased profit level, improvement in profitability, they were able to pay off a substantial proportion of the debt they had in the last financial year. And also, they've also improved significantly on their working capital management. If you look at the balance sheet of the firms, do a thorough analysis of the balance sheet, you could see that it was what drove that forward in borrowings was because of a rise in contract liabilities, improvement in working capital management, and improved profitability were the main drivers.
Right. Yeah, and they doubled their sales. Yeah. All right. Let's move on to. Okay, looks like network is shaking things up there. But let's move on to another BUA subsidiary, right? And we're coming to BUA Cement. They have seen significant increase in administrative expenses, and that has put a lot of pressure, right, on pre-tax profits. When it comes to earnings per share, also that has fallen by 55.96% year on year. How are investors reacting to this?
Well, for BUA Cement, the admin expense doubled, and it's in line with the trend we see in several companies. Cost of operations of most companies have increased because of rising, inflation rate is over 34% now. Diesel costs, transport costs have doubled. So because of that, the admin expenses of the company would have increased significantly as well. So that's why you see that increment from 5 billion to 10 billion naira within the year-to-year comparison. So beyond that, I think that's the main reason. General increase in cost of operations, cost of doing business. However, the company still did well. If you look at the last financial statement that was published, profits after tax grew to 130 billion from 95 billion. That's a half year. You can look at that critically. So any special actually it's actually 7 naira as against 5.29 in the last audited half year result that was published.
And how are investors reacting to all these results from BUA Cement? How is it influencing investors on the NGX?
Well, I think the stock lost 10% during this because of this. That was yesterday. It was one of the factors that drew the markets down. The market went down yesterday, and the reason is that at the beginning of this year, that cement sector, both Dangote Cement, BUA Cement, Lafarge, they recorded significant growth of between 30 to 50% across that sector. So we are having some bit of market correction, price correction of those stocks that moved significantly in January this year, and that's why we saw that little dip in the price of BUA Cement. In all, it has not been a bad year for the company this year.
Okay. Let's move on to MTN Nigeria now. We know that their market value has slumped below 4 trillion. It's at its lowest in 3 years, its lowest point in 3 years. It's a stock that was once worth, above 300 naira, right, earlier in the year, but now it's, down to, way below that. Can we continue to see a dent in their share price, in the share price of MTN and other companies like this that have, FX exposure? And for how long?
Yeah. MTN lost about 887 billion naira in FX loss. So if I would give a proper perspective on what has happened so far, at the beginning of last year, when companies were reporting, they were reporting their FX exposure at the exchange rate of about 460 naira to a dollar. At the close of last year, December 31st, they were using 913 naira to report. So that gap represented the FX loss which companies were reporting last year. This year, the FX rate has moved to between 1.5 and 1.6. So they are reporting based on the current FX, the current losses they made between when the naira slided between 913 and 1,500. So that's why you see MTN reporting as high as 887 billion in FX loss this year. How long will this continue? It depends on what will happen to the exchange rates in the long term, mid to long term. I don't see any significant decline in the exchange rate beyond this 1.516 level. Yeah. The FX reserve is growing, the foreign reserve is growing. Nigeria government or CBN has capacity to defend the naira at 1.6. So this may just be a last year and this year's reporting of bad results coming from these companies. So next year we expect these companies to bounce back. We are also aware that the telecom companies are already increasing tariff. They are going to increase data cost of SMS and calls.
I mean, we're going to have to.
We expect that the impact of this on the financials of the company going from next year. So when will the portfolio of this companies turn? Let's just say a year from now. Next year, we'll stop seeing these FS loss.
We'll see. But for now, that devaluation is really plaguing a lot of companies. That FX loss is really plaguing a lot of companies that are listed on the NGX right now. And as well, like you said, with the tariff hikes, can customers bear that increase right now? That's a conversation we'll probably have further down the line. Before I let you go, Doctor, we know the latest news, CBN has approved a financial package of 700 billion naira to support the proposed merger between Unity Bank and Providus Bank. Unity Bank, we know, is listed on the NGX. How are you gauging, shareholders' reaction to this news, and what does this mean for investors?
It's a good one for the market. Investors in bank have suffered so much over the years. In fact, at some point, most of them were thinking that they were going to lose their investments, given what we have seen happen to other listed companies like Skybank, Intercontinental Bank, which got liquidated. So this is this offers hope that investors there get very good the way to make some that their investments will be salvaged. As to how the market is reacting to this, the stock is currently on Unity Bank is currently on suspension because of delay in filing its last year audited financial statements. We expect that maybe in some few days from now, the bank would have been able to get its ass right, get Central Bank to approve the financial statements and publish it. What will be market reaction? The stock will rally, the stock will go on beat, the stock will rally from 151 naira where it is today. I think it will rally to over 3 naira. So I expect I don't be surprised to see 100% rally in Unity Bank.
Right. We'll look out for that rally. Thank you very much, Dr. Paul Uzum, Director at Halo Nigeria Capital Management. It's a pleasure having you in.
Thank you.
All right. It's still market pulse. Activity in the banking sector, driven by CBN's new minimum capital requirement. We're seeing a merger and more public offers up next, so stay tuned. All right, to align in order to meet up with CBN's new minimum capital requirement of 500 billion naira, Zenith Bank PLC is shopping for 290 billion naira on the NGX. They have announced a hybrid rights issue an offer for subscription to meet the new minimum capital requirements of 500 billion. Zenith Bank requires about 230 billion, right, to meet this requirement. So, to raise this, we're seeing them put forward an initial public offer of 5.2 billion ordinary shares at 36 naira 50 kobo each, available to the public. And then there's also, they've put out the application must be for a minimum of 250 ordinary shares and multiples of 250 ordinary shares thereafter. And then there's also the rights issue, right? 5.2 billion ordinary shares at 36 naira per share for existing shareholders. So joining me now to provide more data and context to these developments in the financial markets analyst David Olujimi. Great to have you in.
Thank you very much.
What do you make of this offer, and is it a good value proposition for investors?
Is for the most profitable bank of last year is great value. For a bank that achieved the share price of about 47 naira this year, 36 naira as the share price, as the offer share price, is great value. That's what I'll say.
Right, but we've also seen a slight decline, this year to date.
Yeah.
Shouldn't that also, disincentivize investors?
The thing we've seen with Zenith Bank is what we've seen with other banks. We've seen banking stocks take a crash. We've seen them, will I say a crash or a fall per se. And Zenith Bank is one of the most capitalized banking stocks on the NGX. They are just second to GTCO Holdings. It's not an issue because Zenith Bank looks like an undercapitalized, undervalued share, because this bank reached 47.50 at the peak of, before the entire recapitalization thing happened. Then we just saw them going down to 34, 35. Now they're about 37 naira per share. So it's not really really a problem, because Zenith Bank has value to provide. 676 billion naira profit after tax last year. The most profitable entity in that was listed on the Nigerian exchange last year. I think they have a lot of value to give investors.
Speaking about profits, we know that their foreign currency revaluation gain in 2023 was also quite a lot, right?
Yes.
And that is going to be subject to 70% tax. How do we see this impacting the balance sheets and also investors who are watching that happen?
So, like we've been discussing over the past few days, we've been talking about the fact that accountants will be made known by the banks, because we've seen they put it in their sheets. They put 236 billion FX foreign currency revaluation gain, but they did not tell us realized, unrealized. I don't even know if they know yet. So we've not seen anything happen for them yet. But there are two things involved. We can see a situation where the currency, the realized gain is not as much as we are expecting, or we can see a situation where it's as much. Maybe they have realized gains of about 100 billion. That is going to be a lot of capital decline from them. That's going to be a lot. So it's a two-way thing. But we wait to see their books and see what they bring out for us. What the federal government says, oh, this bank made us realize gains.
Yeah,
so it's a two-way thing. It's a two-way thing.
There's a lot to look.
There's a lot to look at, considering that they made a lot of FX gains.
They did
last year.
They did. But zooming out a bit and looking at the bigger picture with the global, volatility in the global markets, how do you also see this impacting recapitalization exercise, right, on the NGX?
So one thing is that we saw that happen from Friday till Monday, but I think over the past 2 days we've been seeing the market slowly gain. It's like today now, the Nasdaq is doing about 2% gain. We've been seeing some of these tech stocks go back up.
And you don't see any volatility ahead?
No, I'm not seeing anything that will shift the market until we see the American elections and probably see what goes on in that space. Another thing we have to also note is that the Nigerian exchange, like I've said before on this show, is that there's not so much exposure to the foreign market. We don't have such high level of foreign participation. Nigerians are going to probably raise 90% of the stock.
All right. We'll see. We'll see how that pans out. Thank you very much for joining me, David Olujimi, financial markets analyst with Nairametrics.
Thank you very much.
All right, up next, we're heading to the African markets. And as David has already said, we are seeing that rebound from activities Friday, Monday, the Monday blues. So yes, we're seeing a rebound across African markets. I believe JSE is up as well. Egypt is up as well, amongst many others. So, hopefully we see the bulls continue to have a hold on the market and it gets back to position, if I can put it that way. But that's as much as, we can share on the show today. We'll continue to track the pulse of the market, 4 p.m. West African time, every weekday. It's Market Pulse here on News Central in partnership with Nairametrics. Until tomorrow, I'll leave you with the global markets.